All right. Good morning, good afternoon, good evening, everybody. I'm Karen Bodner, and I'm the head of BNY Mellon's Global Investor Relations Advisory team in our Depository Receipts division. And I'm here to talk to you today about targeting in the time of COVID. This is a very challenging environment. But I wanted to start today by setting the stage with some interesting trends that we've seen in the asset management industry, and then move on to talking about targeting, and also particularly bring in ESG, because in this challenging year, that's been a very key theme. So thank you all for joining me today. I'm going to switch to my slides. Here we are. So I wanted to start today with a look, as I said, at some trends in the investor relations industry and the asset management industry. So asset management industry consolidation has really been a strong trend for this year, with JP Morgan telling investors that they are very interested in buying an asset management firm, and Morgan Stanley moving quickly to acquire Eaton Vance. We also saw an activist investor encouraging Janus Henderson to have a merger within that industry. We see that COVID-19 has expected to shrink asset managements by almost $2 trillion this year. Cerulli Associates research firm projects that industry assets will fall to $102.7 trillion from $104.4 trillion in 2019, $2 trillion, ending more than a decade of growth for money managers. The global decline will be primarily driven by shrinking assets under management in Europe and the US. According to Morningstar, investors continue to pull money out of US equity funds. In September, there was a $21 billion outflow alone, which was the largest number since April's $18 billion outflow. Beyond 2020, we do expect the global asset management industry to recover and grow, and that will be fueled by increasing demand, primarily in developing countries, particularly in Asia, where we see growth expected to come back. ESG assets globally, meaning mutual funds and exchange-traded funds, more than doubled in the past 5 years to $1.3 trillion in June 2020, according to Broadridge Financial Solutions. And that's emblematic of really this push for ESG that we're seeing globally. We're seeing a push for ESG standards, including BlackRock backing the IFRS Foundation, and the big four accountancy firms working together on their own ESG reporting framework. At the same time, 5 sustainability organizations also announced in September that they're working together to develop a global reporting system. So there's really a consolidation of the idea that we need a framework that is agreed upon globally. And that's because ESG funds, as I said, are growing. ESG funds grew from fewer than 50 in 2017 to over 500 in the United States as of the end of last year. And so it's even more now. In Europe, as you know, integrating ESG factors at both the research, security selection, and portfolio level has completely become the norm. And finally, during this time of COVID, social responsibility and the idea of responsibility to employees and stakeholders is clearly in focus with this pandemic, and it is more relevant than ever. And so that's why we're talking about it in the context of targeting. So let's move on to targeting, and why is it important? So in this environment, it's so important to connect with the trends that you're seeing and how you can react to them. Given that targeting drives effective engagement for a company, it's important to take a systematic approach to identifying and attracting long-term institutional investors and support for the company's shareholder base. This slide illustrates the sort of 4 broad categories and steps in this holistic targeting process. How does that change during COVID-19? Well, when you're beginning an investor targeting exercise, there are a few key questions to start with, and these help the company understand its existing investor base and the changes to that base that they want to achieve as a result of a successful targeting program. So during these times with COVID-19, it's important to understand things like, have investors in the company changed their risk profile due to the pandemic? Who has traded in and out among the trading volatility? What was their entrance price? Have they made or lost significant amount of money? Is the company equity story fundamentally affected by the virus, and is that positive or negative? All of these are key questions to ask yourself as you're thinking about targeting in this environment, so that you're making sure that you're reaching out to the right investors with the right questions and the right information. There are a number of considerations for a company to identify and screen potential institutional targets. We start with an evaluation of the current shareholder base, reviewing the current and historical shareholder base to identify the trends, recent buys or sells, and gaps. It's important to pre-qualify new investors, verify and confirm interest in the company through direct outreach. And it's important to prioritize conferences and non-deal roadshows. You have to vet and review management's meeting schedules to ensure that the highest quality investors are prioritized. And it's important to work with the brokers to achieve that, making your wishes known, not just theirs. We also think that conducting shareholder-based analysis and meeting audits is important, looking on a quarter-by-quarter basis to determine the risks and opportunities while assessing the efficacy and efficiency of the engagement strategy. Meeting audits could include a year-end review of conference and non-deal roadshow investor attendance, a review of specific conference attendance, or changes year over year. Who are you seeing? How does that change? Were those meetings effective? Did they convert into shareholdings? Things like that. And something that's complementary to this buy-side targeting is sell-side targeting. It's important to develop and foster relationships with high-priority sell-side analysts because their influence, credibility, and networks can help them support the company, its market valuation. A good working relationship with the analysts help you use those brokers to prioritize the meetings that you want. And it's a two-way street in terms of the communications on what their goals are and what your goals are. Communication, obviously, is always essential. In this slide, I'm looking at the flow of ideas for targeting, including identifying attractive investor targets, ensuring continued dialogue with the current shareholders, very important, building a pipeline of potential investors, particularly looking for investors who have conviction in the company's equity story regardless of the share price. That's the tricky part. Even during COVID, we think it's important to group priority investor targets by geographic location. So even though you're doing this virtually, investors that are in the same region tend to ask similar questions, and it makes it easier on the management team to group investor by type or by location, if at all possible, so that the day flows more smoothly and the kind of questions you're receiving match each other. Of course, the real benefit of this virtual nature of the meetings these days is that tier 2, tier 3, and tier 4 cities, those smaller cities in outlying areas, are much easier to get to in a virtual setting than they are if you're having to hop on a plane and fly around the world. Keep in mind during the investor engagement process, of course, that it takes time for prospective investors to be converted into shareholders. And the nice thing, again, about the COVID environment is that you can plan for multiple meetings with multiple internal and external stakeholders. So you can begin with introductory meetings, perhaps just with IR, and move to more comprehensive meetings where you bring in your C-suite, or even in-depth conversations with specific project managers or product managers so that you can really have a deep dive with investors who have specific questions. And we think that's really sort of the beauty of not having to get everybody on an airplane. There are certainly advantages to this turbulent time. So we recently conducted a study, actually, BNY Mellon and Greenwich Associates, and we went out to 38 investors in the United States. We stuck with middle tier investors, not the biggest investors in the world and not tiny ones. And we wanted to ask them how they think COVID has changed investor meetings. So in general, we found that investors were happy with their access to international companies. There were some gaps that we identified in the paper, but 63% of investors stated that they were either extremely or somewhat satisfied with their level of direct corporate access, which leaves that opportunity with 37% of investors who said they were either neutral or somewhat dissatisfied with their access. But nobody said that they were very dissatisfied. So generally, people are doing a really excellent job at this, we think. We discovered that these U.S. investors spend more on international corporate access proportionally on domestic corporate access, with overall corporate access expenditures accounting for about 38% of their annual equity research spending with sell-side brokers. So of the total spend, 38% is on corporate access broadly. It's a good thing that they're generally very happy. They're spending quite a bit of money on it. We also found that in general, investors felt that virtual engagement was good. We got quotes that people said virtual meetings were about 60 to 70% as effective as in-person meetings. I think that's really a positive thing. And I think we will, as we all get better at this and at this virtual environment, that will continue to grow and to be seen as more effective. Finally, coming back to my ESG point, on ESG, 82% of the investors we surveyed said that they see ESG considerations as an important part of basic due diligence. So this paper comes out at the end of this year. Please keep an eye out for it. We'll make sure that we keep you all informed as to when it's published. Moving on to some best practices for virtual engagement, since we're talking about that in this COVID environment. This is a very basic slide on virtual engagement, blocking and tackling, we call it in the United States, opportunities and best practices. It's kind of a checklist for meeting prep. But at this point in December, I think everybody's really good at this, so I'm not going to spend too much time on this slide. And I wanted to include also some basic best practices on crisis communications. Obviously, we all went through the crisis this year, and hopefully we're coming out the other side now. It seems like we have a vaccine in sight, or several vaccines in sight. Markets are taking this very well, and we're really optimistic about 2021. I wanted to include this just in case you hadn't put any of this information on your website. For example, a commitment to the health of all stakeholders. It's never too late to add this kind of stuff to your website. And we recommend including all of your COVID updates in a clear single place on the IR website and updating that regularly. Another thing that we suggest that we've seen some companies do in Europe is updating the frequently asked questions on your website to include actual frequently asked questions during the COVID crisis. So the impact to the business, any procedural changes that you have made, updates to your earning estimates or guidance, those can all go into the frequently asked questions bucket onto the website so that investors have a quick and easy place to find it. And you can get down to talking to much more strategic things with them, which is really what we all hope that those IR conversations are about. And here's just some basic tips on communications as well, especially in this pandemic. We think an authentic voice that really represents the company's values and goals is so key here. This is really just like ESG messaging. A message that isn't authentic to the real strategy and vision of management isn't going to be believed or taken on board by your stakeholders. So we think that you should use this crisis as an opportunity to build credibility, trust, and alignment with all of your stakeholders. Think strategically about how to use communications to achieve your long-term goals, including targeting new investors. Now I wanted to talk a little bit more about ESG for a minute, because when you're talking about targeting, you're talking about what investors are going to ask and what they care about. This is important when you're preparing for these meetings. And it's also important that we think about seeing the right people and having effective conversation. So ESG during COVID, as I mentioned, 82% of investors that we surveyed said that this was a key part of their due diligence. That really matches what we found in this, which is our global IR survey, which we do every other year. We asked who was attending ESG-focused investor meetings. Investors bring a specialist to these meetings 83% of the time, according to our respondents. But issuers only brought them a specialist 27% of the time, for global teams, 26% matching that for emerging markets teams. We think this is a real opportunity for IR teams to improve. If investors are bringing the specialists and you're bringing generalists, you're being outmatched in these meetings, particularly if the meetings are taking place virtually in a COVID environment. Bring your ESG, your sustainability specialist along. Why is this important? Well, it's really important who's at the table and what's going on in this conversation, and I'll give you an example. Nordea Asset Management recently announced that they're completely divesting from one Brazilian company, who I won't name, taking all of the $50 million that they had in out. They said it wasn't in response to any single news item or action from the company. They said it was, quote, after a period of engagement with the company where we didn't feel that we were seeing the response that we were looking for. So that was their head of responsible investment who said that. So the conversation matters, and who's in the conversation matters. The company's response was that it wasn't given the opportunity to demonstrate to Nordea its total commitment to the transparency of its relationships and the sustainability of its operations. But to me, that means that they really didn't have a good, in-depth, matched, equal conversation. If the investor did not feel that they were getting the information that they wanted, it means that the issuer really needed to do something slightly different to bring the right people and make sure that they were being convincing about how they feel and what they saw. So again, it's not just about targeting, it's also about the conversation, preparing for the conversation, and making sure that you have the right people for the conversation. Finally, I wanted to look at one more chart from the IR survey. And this is about the number of companies who held ESG-focused investor meetings. And it was much greater in developed markets overall at 52% versus 33% in emerging markets globally. And initially, you might think that this is surprising because emerging markets companies, I find, are generally more focused on ESG than their developed markets counterparts. Perhaps because they don't get the benefit of the doubt from investors and need to prove their capabilities in this area more regularly. But in reality, I think that this ties into how we think about this result. It's not that these conversations aren't happening in emerging markets, it's they are completely integrated into the overall IR strategy and IR conversations. They're part of the mainstream investor meeting. They're not separate ESG focused investor meetings. So this ties in really well to what we were talking about in our thesis today on targeting and the importance of matching the conversation to the target and to the times. So this COVID times, ESG, absolutely increasingly important. So in summary, COVID has changed things, but not necessarily for the worse when it comes to targeting and investor engagement. We can do investor engagement much more easily in a virtual environment, and we've brought ESG to the fore in our conversations. Targeting remains a key component in the IR process, planning, implementation, and development. And finally, ESG continues to be a huge focus for investors and how those investors think about how they're reaching out to companies and how you should be prioritizing and reaching out to companies. So I wanted to thank you all so much for your time. It was a true pleasure being here today and talking to you all. And I wish you all a wonderful holiday season and new year. Thank you very much.